let's talk about this. This is going to be a fun topic to discuss, which is buybacks. So that video you reacted to, Arnie, one of my good friends, it was really funny because he said we shouldn't do buybacks. He's like, the stock is too expensive. There shouldn't be buybacks. And then in your reaction, you were like, actually, no, I think buybacks is pretty good. It's less dilution. It helps shareholders. I think they should do it. And then Arnie was just like, this is dumb. We should not do buybacks. And then Palantir comes out on earnings day. It's like, we're doing $1 billion worth of buybacks. And me and Arnie are laughing about it because Arnie's like, I told Jeremy basically he was wrong. We shouldn't do buybacks. And now the company's saying we're doing buybacks. And I think to Arnie's point, which I'm sure you'll agree with this to some extent, which is that buying back the stock at $20 when it's probably at a really rich valuation is just not the best thing to do with $1 billion in cash, because the company will be left holding the bag because your growth rate is only 13%. So we're not going to stay at $20 for a long time. In general, in your experience dealing with some of these companies and why they do buybacks and financial engineering, did you think that was a good move? And do you think these prices are attractive to buy back the stock?
Yeah, I love it. If you are, and I think any Palantir bull, let's say you think Palantir is going to be a $50 stock someday, a $100 stock, a multi-$100 stock. If you think, really, really bullish, you should be applauding them for buying as many shares as they can possibly get their hands on at $15, right? Because if the stock's going where you think it's going over time, they're not going to be able to buy shares back this cheap, right?
Yeah.
And so you're better off the earlier you start when it comes to your buyback, if you really have the sort of company that's going to set up for a huge 5-10 year type run, right? So right now I'm looking at it and it's like they're not doing too much with the money. Obviously they're generating great returns right now from treasuries. That's phenomenal, right? Getting to make that easy money right now. But outside of that, you're going to have all this extra money. Why not go ahead and use it as a buyback right now? We're not doing anything with it. We already have the team we need to have this product be successful in the marketplace and put up the numbers. So I really like the move. I'm hoping, if anything, if you're a real long-term Palantir bull, you should hope the stock goes down short-term. You should hope this stock continues to tank, which I'm not so convinced it's going to go much further in terms of this tanking that we've been seeing recently, but you should hope it goes to $12. I think that's somewhat unrealistic, but you should hope it goes there. And the reason being is you can buy more shares, right? Yeah. As a Palantir shareholder and somebody that wants to buy the stock, and the company's gonna be able to buy a lot more shares. The cheaper it is, the more shares are gonna be able to take off the market. And if this company really becomes the money printer, I think it can become a cash flow machine. I think it can become over the coming years. I mean, my gosh, let's take as many shares, because we know what used to be the issue with Palantir was share dilution. That's what everybody talk about: share dilution. And if we can finally take a bunch of those shares off this market, I think it would be a great thing long term for the company. And, you could think about Apple, for instance. Apple should have been buying shares back way before they started their buybacks, because back then the valuation was much cheaper. Instead, they just kept stacking cash to the ceiling, getting no returns on that cash. And then finally they realized, oh gosh, we should probably, buy back a bunch of shares because it's going to help us out immensely. So
do you think Palantir was wrong for not buying back at $7 or $8 and doing it now?
No. And the reason being is, one, their cash balance was lower then, right? Especially if you're looking at 2022. And I think their positioning in the marketplace wasn't as good and solidified as their positioning is now a year later. So we could say, why wasn't Palantir buying back shares a year ago good? I think now you're in a much better position, because Palantir is much more solidified, I feel like, in the marketplace now as a company that so many businesses want to talk to and converse with and see what Palantir has to offer, versus a year ago when leads were just a lot harder to come by, right? So yeah, so that's kind of my opinions and perspectives. I think it's a good move here in the short term, and hopefully over the next 6 to 12 months, they are able to take a lot of shares off this market.
Yeah, I think that makes a lot of sense, because initially I was like, oh, I wish they did buybacks at $6, $7, $8. But then I kind of realized, like, they weren't profitable. They had ridiculous amounts of stock-based compensation, and the true trajectory of the business was absolutely up in the air. I mean, there was no yep, Palantir is definitely going to be around. It was kind of like a startup that went public and is kind of trying to figure things out. Now there's a lot more confidence around the stability of the business, likely going to get into the S&P 500, a lot more institutional investors, GAAP profitable. And so buying back right now makes sense. It doesn't look like you're kind of using shareholder cash to pump up the stock at $6, $7, $8. And on top of that, it's kind of legitimizing one of the things Karp said in the earnings call, which is that we're betting on ourselves. And I think there's a bear and bull case to this. So the bear case is, okay, great, you bet on yourself. That sounds great, but like you can't do anything with $1 billion. You can't do something else to bet on yourselves. You have to buy back the stock. You can't put it somewhere else to grow. The bull case is, instead of acquiring some other company, they're just going to acquire their own stock because they feel so strongly for themselves that they're going to be able to grow. Which side of that do you come on? Do you come on the side of put $1 billion into sales and marketing and grow, or put $1 billion into less dilution and buying back the shares?
Yeah, I think you can do many things, as great companies do. Like I mean, you look at, if we want to look at the most respected company in the world, the biggest market cap, it's Apple, right? Apple pays a dividend. They do a share buyback. They've got incredible research and development. They're always spending a fortune on research and development. They got an amazing sales team and retail team and all these sorts of things. If you're a great company, you should be able to do multiple things and not just, we need to spend it all here, right? Let's say they added a ton more employee force, ton more folks. It doesn't always add up to more productivity. It could actually hurt your business. If you follow Meta, this is one of the Meta storylines. Zuckerberg's talking about this. Zuckerberg's like, we're a much more streamlined company now. We're moving faster. We're moving smarter, and everything's transpiring in a much better way for us than we were a year ago when we had a lot more employees. When you have a lot more employees, you're going to add a lot more managers. You're going to add a lot more managers managing the managers. You're going to get bureaucratic. Ideas are going to get shot down much more likely, because essentially you have to go through so many different people to get this idea. And all it takes is one to say, nah, I don't really like that. And it gets shot down. So you aren't able to take as much risk as a business. So, if Palantir feels like they got, and from what I've always heard, Palantir is one of the best employee forces literally of any company in the world. If they got
Takes
that,
like 7 interviews to get a job at Palantir.
Yes. Yeah. I mean, I know people, in the private stock group that have told me they got interview at Palantir. They couldn't make it past the first round, but yet the other big dogs, the other big tech companies that are supposed to be so hard to get a job at, they actually got offers from those companies or made it further in the rounds and whatnot. So my opinion is you can do many things. Palantir's got a great, employee force. In terms of sales and marketing, it sounds like it's a longer sales cycle. It's not like you just show up as a salesman for Palantir or somebody and you just, make the deal happen.
Yeah.
Sometimes these take many months, if not 6 months, 12 months to actually close a deal from the time the customer engages to the time it closes. And that's a little bit of an annoying thing for us Palantir shareholders to go through, is like this longer sales cycle. And obviously recently it's been even tougher because the macroeconomic conditions where, to get a big contract like Palantir is trying to get, sometimes it's going all the way up to the CFO, CEO, when those deals used to go, to lower ranks. So anyways, that's kind of my perspective. But do you think they should be spending more money anywhere else in the business right now? I'd love to hear your thoughts.
I actually think you gave a good take. I was going to say invest a little bit more in sales and marketing, but I mean, you have a good take, which is that the more you invest in terms of employees, managers, mid-level managers, and that is exactly the problem Meta had. And then you have to end up firing all those people. Obviously, Palantir is not as big as Meta, but I think the culture of Palantir is not sales oriented, and that's one thing I hope they change. I don't know if hiring more salespeople will change that, given the culture. There has to actually be a cultural change, which is a much more difficult problem. It's a whole different conversation, but stacking up a bunch of people and giving them a couple $100 million in compensation to sell the product, it might not be the easiest thing to do, especially if the macro environment is not allowing enterprises at 5% interest rates to be like, yep, we're ready to buy Palantir at this moment.
Yeah. And also, whenever, I don't think people think about this, but whenever you hire a ton of employees, guess what? Now a ton of your current employees have to train those employees, which takes a bunch of their focus and attention away from other things and other tasks they could be doing. And now they got to focus on training this new guy over here. So they're on the right track. And we know great companies train great. Like if the number one key to a successful business is like when you get a new employee, you train them up right, and you train them, because if they don't have the right culture from the go and the right training. I learned this at Quick Trip being a manager. Like, you've got to get them from the day one. If that person's trained bad in the first couple of weeks, they're ruined. There's no chance unless they just happen to be some sort of all-star. If you get them started right away with the type of right attitude and trained properly, you're looking good. So yeah, it sounds so easy. Like, let's just hire an extra 1,000, this or that, and then it's actually much more difficult than it looks on paper, I guess we can say.